Welcome to the live stream, ladies and gentlemen. I'm your host, JT, and you are watching Black Box Trading. All right. Not much to talk about on the fundamentals side. Nothing really popping up in Twitter land. Not seeing any noteworthy headlines. So let's just get straight into the technicals. Here we are on the daily, and we're looking at this area here that we're trying to hold as support. Let me get my little pointer out here. So, this long-term support, this actually goes back all the way to the prior cycle highs. So we grabbed this trend line from the double top from the prior cycle. It was also the intermediate top of this cycle, and it's now holding as support. What we're looking at as far as this kind of bottoming pattern is what seems to be developing as an inverse head and shoulders. So we've got the low, we've got the lower low, and we are potentially working on the higher low. So you've got your two shoulders and the head there for your inverse head and shoulders. When we take a look at the moving averages, here on the daily, we are below all of the major moving averages, which is not a good thing. So, credit to the bears on that one. Let me just get rid of this arrow. There. Oops. Yeah, we are below the 7. We are below the 30. We are below the 7 in blue. We are below the 30 in red, and we are below the 50 in orange. Also, we are inside of our wave. This wave is the 200. So we're basically below everything. I mentioned it on the other stream. It's not really a divergence, but you do have this different pattern that's taking place where you have a low, you have a higher low, and a higher low, and you have an inverse head and shoulders here. So that's not a technical divergence. I want to make that very clear, but it is something that I see pop up in the markets often enough that it becomes noteworthy, but it's getting a little sloppy. So maybe the daily is not looking as bullish as it did yesterday. The 4 hour, however, is looking not too bad. Not too bad. We had our bullish divergence green diamond formation that began to play out. If you were watching yesterday's show, we were saying, it's probably a good time to buy right here. We've got two green diamonds and a bullish divergence. Let's paint the picture of that divergence here. We have a low and a lower low on price, and we have a low and an equal low on the RSI. That has resolved to the upside. It has resolved to the upside. It has reclaimed the 7. It came down and tested the 7 and has so far successfully held the 7 as support and is trying to rally off of it. One good thing that I can take a look at on the daily, so, we are below all those moving averages, but the one thing, just to jump back over to this time frame, we'll go back to the 4 hour in just a moment. I just forgot to mention this, that we do have this 3-bar reversal pattern. So this is a candlestick pattern. I do prefer to get confirmation in market direction from moving averages, but, I'm bullish on lower time frames, so I want to be taking notes as to what's happening on higher time frames as well. And we have this 3-bar reversal. So a 3-bar reversal, you'll have a large red bar, you'll have a doji or a 2 dojis, and you'll have a bullish engulfing covering both of those dojis, and that's called a 3-bar reversal. Now, there's plenty of trading time left in this candle. This candle still has 20 hours left in it, so absolutely this candle can close red. It can close as a doji. We don't know how this candle is going to close for the next 20 hours, but if it closes as a bullish engulfing candle, that's a pretty standard setup for a lot of traders out there. You can see how those have played out in the past. Bearish candle, 2 dojis, bullish engulfing, you get another green day off of it. Down here too, bearish candle, 2 dojis, bullish engulfing, you get a rally. So if we close as a bullish engulfing on today's candle, I think that would be good. We also just got the monthly close. So April, we're now in April. March closed red. Womp womp. But yeah, so March closed red, and April, I'm not expecting anything too spectacular to come from the month of April, other than just building confidence in the market. So, we could see a little bit of a recovery. I'm not calling any large breakouts. I'm not calling us crossing the line in the sand for us to flip back to our bullish bias. Currently, the market, the wave on our alpha numerics indicator, if I flip back over to the daily, the wave is red. The red wave indicates that there's bearish momentum in the market. In order to turn this wave back to green, we need to take out 103. So going back over to the monthly chart, I don't think that it's very likely that we are going to take out the 103 level of, I don't think we're going to take out the 103 level on this month's candle, but I do think that we're going to have a little bit of repairing of the trend during this month, with the targets of acceleration into the final stage of the bull market, I think happening around early to mid-May is what I'm thinking. So if I was to guess as far as recovery, I do think that this candle will at least close as a bullish engulfing candle. So at a minimum, it should close above, we'll call it 85,000. And with the extended targets up at around 88, maybe even 90, I think a nice psychological close above 90 could really help the market. And, we could also extend as high as 94. The targets, they're too hard to determine right now because it's the first of the month. But as the days go on and as the weeks go on, we can add probability to some of those targets. But what I do feel right now, as it stands on April 1st, is this candle is going to close as a green candle. And that's going to bring confidence back to the market, and it's going to set up May to be a breakout candle. Going back over to the 4 hour. Yeah, like I mentioned, the div is playing out. It got stopped at our overhead resistance here. This has been kind of a support / resistance flip area for here. It was resistance, resistance, support, resistance, support, and now acting as resistance. So we do need to get above this level of, we basically need to clear 84. Once we clear 84, we really don't have a ton of resistance above that. As you can see, the price movements above 84 are quite frictionless. You can see it's frictionless to the upside, it's frictionless to the downside, it's frictionless to the upside, frictionless to the downside. There's not a lot holding us back until we get up to kind of this area right here, which is kind of that 90,000, that psychological level. Once you start getting close to 90 is when you start encountering that resistance again. Let's just see how we're doing on Stream Health. Stream Health looks good. Hit the like button. Don't forget to share this video, retweet it if you're watching on Twitter, and let's try and get this video in as many viewers' hands as possible. And then let me know what you want me to take a look at as far as altcoins and tickers and all that jazz. All right, so that's Bitcoin. That's Bitcoin. So we're waiting to get above that level. If we can clear it, if we can clear that $84,000 level, like I said, there's really nothing holding us up until we get up to that kind of area right there. Let's see how the rotation is taking place. Another green day, another green week here on Bitcoin dominance. Another green month on Bitcoin dominance. Don't stand in the way of this train is my advice. If you are new to crypto, if you are brand new to crypto and you are investing in high to medium market cap coins because you like the fundamentals of them, I would hold off. And I've said this for months. I've said actually years. We've been following this chart for years. The reason that you're buying an altcoin is because you want it to make more money than just buying Bitcoin. People don't buy Bitcoin because they're like, how can I get a little bit more? What can I do to get a little bit more money? So they don't buy Bitcoin and they buy altcoins. But as long as this is continuing to print green candles, you're not achieving your goal. You're not doing better than Bitcoin. You are at best slightly above Bitcoin at best, but it's much more likely that you are underperforming Bitcoin or you're actually performing quite poorly. And you may actually be in a technical bear market, as a lot of altcoins are. So do not ignore this chart, especially if you are new, especially if you're buying. If all you do is buy coins on exchanges, you're not getting into like the really early on-chain minting stuff. You're not familiar with smart contracts and wallets and how to mint these coins for free or be one of the earliest participants in the token. If you're buying it from the exchange, just don't touch alts. Don't touch alts. I've been saying it for a long time. I'm sure the frequent viewers of the channel are sick and tired of me saying it. But nothing's changed. Nothing's changed. But we are watching, and we did have our altcoin season level start. It was down here at around 57. On yesterday's stream, we brought it up. So it is getting easier for us to get into altcoin season, but as it stands right now, we're not there yet. So be careful, be cautious. It's not quite time. It's not quite time. Let's take a look at some of the bigger alts. This is XRP BTC. I trade the Bitcoin pair and encourage you to do the same. It's looking like it wants to react a little bit. Now, in the event that it does have a pullback, I'd be targeting kind of the middle of this range, which is around 1,500 sats. Don't know what that equates to in dollar amounts. Don't care what that equates to in dollar amounts, but we can do it in percentage terms. And from the current price, that would be a reduction of about 40%. If you can't handle the downside, you don't deserve the upside, is the old saying in crypto. That being said, there is a possibility, although this structure is a little ugly, there is still the possibility that this is a bull flag. The problem is the bull flag is slanting upwards. Usually what you want from a bull flag is you want the formation to be flat or down. Those are great. Flat or down is perfect. That's what you want to see in a bull flag. What you don't want to see in a bull flag is up, because up is showing that there's a bid and the bid keeps getting smacked down. Yes, we're making higher highs and higher lows, but it's statistically proven that those break to the downside more than they break to the upside. Everything is probabilities. Can we break to the upside? Yes, we can. But as it stands right now, because the consolidation is uprising inside of a bull flag, then the probability is that it will break down. The silver lining to the XRP bulls out there, though, is if it does break to the upside, it breaks to the upside massively, because it takes the market off guard, and people aren't expecting it. People might have actually been shorting it, and the shorts add fuel to the fire, and it can pump even harder. So, there's a lot of wait and see going on in the market right now. Trump team invested into a Bitcoin miner. I heard about that. Actually, you're right, Freedom 33. I did see that on Twitter, and yeah, we didn't mention that fundamental. So I don't have anything queued up, but you're absolutely right. They partnered with an American mining company, and they are going to be setting up a Bitcoin mine and using the Bitcoin that is mined as a part of the Bitcoin strategic reserve. So very, very interesting, very cool stuff. And just adding to the supply shock, could you imagine if every government entity decides to take this strategy, which is part of the game theory, by the way? If you are not familiar with how important the mining industry is to Bitcoin, this is why I poo-poo on shitcoins quite often, because shitcoins don't have the mining industry. The mining industry is instrumental to the success of the blockchain. And I'm not going to dive too deep into the weeds as to why that is right now. But if you've read the book Soft War, which if you haven't, I highly recommend that you read the book Soft War. It has to do with the fact that, eventually, if this does become even just 20% of a trade currency, if 20% of the countries decide to use this as a trade currency, you are forced to run mining infrastructure, because you need to make sure that you have enough nodes to get your transactions on the network. And you have to make sure that you have enough hash power to ensure that your transactions will go through your own country's pool so that you can post your transactions to the blockchain. Because if you don't have enough hash power, other countries that hold a dominant share of the hash power can censor your transactions. So imagine this. Imagine Russia holds a significant share. It's very unlikely, but let's say they hold about 40% of the hash power. And let's say they hold, whatever. Let's just say they hold 40%, which is already unlikely, but you kind of get what I'm saying. They can decide with their Bitcoin miners, okay, any transaction that is coming from an official government address is censored. So you have lost access to 40% of the network. So what do you do in rebuttal to that? You need to take on more of the network. And it actually becomes a Cold War, where we're like setting up for another Cold War of hash power. The hash war is beginning. And the hash war is very exciting because it's going to basically eliminate one of the largest sources of supply on the market. One of the biggest selling pressures in Bitcoin is miners selling their Bitcoin to pay for their electricity. And I don't fault them at all. I actually think it's a good thing. That's fair and equal distribution of the coins. If I'm somebody who produces coins and I'm giving them out, I'm selling them to everybody consistently, I actually think that that's a good thing. But in the context of a hash war, that will reduce, which will affect number go up. Because you're no longer going to have that selling pressure, because the selling pressure is now going into strategic reserves, and all of the electricity is being subsidized by the government. So interesting times, man. Interesting times. Thoughts on BTC miners overall? As far as like stocks, as far as stocks, yeah. Okay. Mining stocks. Yeah. I don't trade stocks. My partner, Matt, trades stocks, and we can take a look at some stocks, but I don't trade stocks. It's just a choice that I have made. I try to be as decentralized as possible. I try to live as purely on a Bitcoin standard as I can. And part of that is that I don't trade with US dollar. So every stock is measured with the US dollar. I don't trade the US dollar. I try not to hold the US dollar. I hold Bitcoin, and I'll trade Bitcoin margin. So I pretty much don't use the dollar at all. But we can totally take a look at some. We'll totally take a look at some. Gold is at an all-time high. Is that going to impact crypto negatively? Well, so far it has proven to be the case. The fundamentals of Bitcoin are it's better than gold. That's the fundamentals of Bitcoin. But the most important thing that we're missing from that is that nobody cares or nobody knows. So it's still a speculative asset, and its speculation is highly tied to equities, high risk tech equities. It's basically, the NASDAQ on leverage. So even though its fundamentals should be more aligned and its price movements should be more aligned with gold, gold is a reflection of fear. And one day Bitcoin will be a reflection of fear. But as it stands right now, gold is a reflection of fear. So with gold continuing to rally, it's a pretty clear indicator that the market is not really willing to take too much risk. They are taking their dollars and they are buying hard assets. I think that that's going to flip. I think gold will correct a little bit. I think we will see rallies in the stock market. I think that the risk on assets will rally again until we get to some monumentous, big event that changes the structure of the entire equity market. I'm anticipating a very large crash. Not anytime soon, but a very significant .com 08 type crash. So yeah, if gold continues to rally, it's going to continue to stifle the S&P, the NASDAQ, and subsequently Bitcoin as well. Bitcoin and crypto. How can I, as a small individual, take control of some Bitcoin block space? It's a very important question, I think. So we're getting some pretty deep, hardcore Bitcoiner questions today. So let me know if you guys like this content. If you like this hardcore Bitcoin talk, give the video a like, share it, give me feedback that I should continue to talk about kind of the more hardcore, deep, high level topics of Bitcoin, or do you want me to focus on price and focus on altcoins and stuff like that? Comment below what your preference will be, but I will answer your question. How do you take control of some of the Bitcoin block space? I don't think that it is important for you to do that. And the reason that I don't think it's important for you to control the block space, for those who don't know, what we're talking about is you having the ability to do on-chain transactions. As it stands right now, I mean, the mempool's empty. Blocks are empty. It's incredibly cheap for you to make a Bitcoin transaction. It's like 10 cents. So, the fee market of Bitcoin is constantly changing. But as more and more adoption goes towards Bitcoin, these blocks, they're not going to be empty. They're going to be full all the time. And there's going to be a very competitive fee market for block space, to the point at which a transaction would cost 100, 200, 500, 1,000, potentially even at max adoption, $10,000 for a transaction. No joke. So it's a very concerning issue, because when you look at layer 2 scaling solutions as they stand right now, they're not that great. We have Liquid, which is a 7 of 15 multi-sig federation, which means you're trusting people. That's not a good solution. There's a lot of trust. You can trust the federation. It's better than an exchange, but it's still trust. That's not self-custody. That's trusted custody, which is not a good solution. So Liquid isn't the solution. And then we have Lightning. Lightning, you can self-custody your funds on Lightning, but A, every wallet is a hot wallet. That's not great. And B, actual self-custody on the Lightning network is very difficult. It's extremely difficult. So I'm in the camp that we actually haven't found the real layer 2 scaling solution for Bitcoin yet. There are some interesting proposals, some Bitcoin improvement proposals that are coming that, like covenants are coming, and OpCat has been tossed around for some basic smart contract functionality on the main chain. And I'm excited for those, because with covenants, for example, what you can do is you start to get into UTXO sharing. So Can you do an on-chain transaction by yourself? Probably not. Not when we're way, way, way in the future. But what you can do is you can share a transaction with 10,000 people. So if it costs $10,000 to do a transaction, to do an on-chain transaction on your own, with covenants and other upgrades to the protocol, you will actually be able to do UTXO sharing, where 10,000 people settle a transaction inside of a wallet, and it'll happen natively. And in the wallet, it'll say, how do you want your transaction to go through? Do you want a fast transaction, a medium transaction, or a non-priority transaction? And what will be happening in the background of the wallet is a fast settlement transaction will be, okay, we're going to share the UTXO with 100 people. So this is going to be your fee, and it's going to be an expensive fee, but it'll settle right away. Then you can do a medium. It's like, okay, we're going to do a medium transaction. You're going to share a UTXO with 1,000 people. And, as soon as we have 1,000 people committed to the UTXO, the transaction will go through. And then you'll have no priority transactions where, okay, we're going to organize a transaction with 10,000 other transactions, and we're going to post it as one. So at the point at which we have collected 10,000 users' transactions on that wallet, we will bundle them all together, kind of like a roll-up. Are you familiar with roll-ups on Ethereum? It's the same concept. You'll get a transaction roll-up. You'll roll up 10,000 transactions into one transaction and post it onto the main chain. That's one solution. And then on top of that, you can do channel balancing and Lightning transaction rollups. And now you've got more functionality and more liquidity for the Bitcoin Lightning Network as well. Lightning's not dead, but the way Lightning works right now, it's not what we want because it's very custodial. I use Lightning all the time. And do I manage my own node? Do I manage my own channels? No. And I'm a hardcore expert level user of the Bitcoin network. I should be doing that, but I don't. So Lightning, I'm just using custodial services because it's just so much easier and the user experience is so much better. One day that will change and it will get easier for you to be your own custodian on Lightning, but that's not the case right now. All right. So that's XRP. That long-winded thing is XRP. Let's quickly do a little bit of TA for those who are here for the TA, and we'll cover nothing's changed on Cardano. So let's take a look at Solana. Solana is trying to catch a floor. Then I'll catch up with more of the fundamental chats. We're trying to prove a floor here on Solana, but really, honestly, Bitcoin's in the driver's seat right now. Bitcoin is playing out like we've said it was going to play out. It's looking like it's going to reclaim that $84,000 level. That will get us back into bullish alignment. We need to reclaim the 200. Once we're above the 200, all the other EMAs will follow suit and we'll go back to bullish alignment. I'm still bullish on Bitcoin. And yeah, it's really all about Bitcoin. The next month, the next 4 to 6 weeks, it's gonna remain to be a Bitcoin dominated market. So for the next 4 to 6 weeks, we're gonna see more green candles on this chart, and we might even see green candles go as high as 64, maybe even 66, or possibly at the extended end of things, 70% dominance in Bitcoin. Like if Bitcoin goes on a massive rally, it could easily get up to 70% dominance. So just chill on the altcoins. Let's catch back up with the chat and see if we can talk about some of those fundamentals. What are you looking for? Card. All right. Traveler of the seas. Yes, exactly. That's why we need some sort of control to be able to send our one transaction in the future. Love the hardcore Bitcoin talk. Cheap views. All right, you're blocked. Let's say that the US in the future has, let's say, 5 million BTC. If they don't control any block space, they are fucked. Yes, 100%. Absolutely. which is why we are entering the hash war. It's very unlikely that anybody watching this show remembers the Cold War, which was the nuclear arms race between Russia and the US. Very scary time. I don't think the hash war is going to be as scary, but we are entering the hash war where nations, the game theory of Bitcoin is playing out, to which nations are going to be forced to invest heavily, invest from a place of fear. The US will invest from a place of fear. Russia will invest from a place of fear because they will need to defend themselves from financial censorship. You're going to see massive mining operations pop up all over the US, all over China, all over Russia. Every superpower is going to invest incredible sums of money towards mining infrastructure. They're not going to buy Bitcoin. Forget Bitcoin. The Bitcoin strategic reserve is stupid. Really, it's not what the US needs. What the US needs is mining infrastructure. So if this really accelerates and this hash war becomes real, you can expect that every major power generation plant in America will be paired up with a Bitcoin miner, which is the most efficient use of energy anyways. A lot of people don't know that, more than half of energy produced is wasted. It goes into the ground. I used to be a power line technician in my prior life, and a lot of people don't know that. They don't realize that, when you have a hydroelectric dam, it's constant flow energy. So if you're not using it, it goes into the ground. With Bitcoin miners, you'll be using it. Anything that doesn't get used by the population will be used by the Bitcoin miner. But anyways, I'm getting sidetracked here. Every single power plant across every major nation will be paired up with a Bitcoin mining infrastructure that can offset any of the use or lack of use for that power plant. And they're going to build a shit ton of power plants. Energy production is going to be probably the most important thing to a nation's sovereignty in this next couple of generations as has ever happened in our life. Energy is going to be so cheap. There is going to be so much energy. There is going to be an abundance of energy, to the point at which I even feel that you will no longer have a power bill, because you will no longer be the customer. The customer will be Bitcoin, and you will just get to thrive in this high energy country. So exciting times, very interesting geopolitical times. There's a lot of really cool rabbit holes that we can dive down. I'm just checking the math. When you did a point and figure calculation on XRP at 2.2 million sats, yes, that will be 0.22 BTC. Yeah. What if Bitcoin trading becomes hand-to-hand cold wallet? Peer-to-peer? I think Bitcoin trading should be peer-to-peer. The problem with true peer-to-peer is there's no order book. But if more and more people trade peer-to-peer, there's less and less orders on the order book, which means when there is an order through a centralized exchange, there's just so little liquidity that the multiplier effect of price is increased. And there's even some Bitcoiners out there that believe that we will reach a price at some point in the future. And we have no idea what happens after that, but we'll reach a price where people won't trade dollars for Bitcoin. That's a possibility. That's hyper Bitcoinization. That's kind of the definition of hyper Bitcoinization, is that Bitcoin is so sought after and so valuable, and every other currency is looked at as nowhere near as capable or valuable as Bitcoin, that nobody wants to trade with you anymore. They don't want the dollars. They don't measure in dollars. They don't look at dollars. The dollars are pointless. If you're an American, are you paying attention to the Peruvian peso? No, you're not. Why? Because it doesn't matter to you. So attach that mindset of you not giving a fuck about the Peruvian peso and apply it to the US dollar, or apply it to the euro, or apply it to, the Japanese yen, or the Australian dollar, the Canadian dollar, whatever. You'll reach that point at some point, but that's like 20 years away. Let's be real. That's not happening anytime soon. Sorry. Gotta be realistic with some things, and that ain't happening anytime soon. Yes, that people don't understand all nations and corporations need block space. It will just be a cost for them in their budgets. Think about it for a second. The price of BTC will go crazy. It will become as necessary as, having a bank account. How do you put a price on that? How do you put a price on getting financial transactions through? How do you put a price on being excluded from a financial system? What would you pay to know that you could be? What would you pay if you knew that somebody else had the power to exclude you from the financial system? You would probably pay a lot to remain included. Hand-to-hand cold wallets, sure, but you still need to get it on the blockchain. Oh, you're talking about like actually handing over somebody a cold wallet, like giving them a cold wallet as a bearer instrument? That won't work. That won't work. Because once there's no value. If I have a cold wallet, I know the seed phrase. If I know the seed phrase and I hand it to you and say, here you go, you now have to trust me that I'm not going to steal your money, because I have the seed phrase. I have the back door to your wallet. So actually physically handing somebody a wallet won't do anything. All right, let's catch back up. Let's take a look at Track. Track has been doing all right. For those who don't know, this is the chain link of Bitcoin. That's right. There is a chain link of Bitcoin. And people are getting really stoked because they're getting ready to launch their mainnet. So mainnet is going to go live in about 4 months. Knowing Track, there will be a delay. Sorry, Benny. I know you work really hard, but the current track record is that there's delays. So let's say 5, maybe 6 months from now would be when the Track mainnet goes live. And people are getting really excited about that, and they're FOMOing into the staking protocol, because the sooner you stake your Track, the higher the APY you receive in TAP tokens. I fundamentally disagree with staking. This is just me. Totally do your own thing, do your own research, decide how you want to handle it, but I won't be staking. We still need to take out 63. So I can't get super excited about Track until we can get above 63 cents. Once we get above 63 cents, it's probably game on for Track. And what's nice about everybody staking their Track is once they've staked it, they can't sell it. So there's actually, for the next 4 to 6 months, we have a supply that's really shrinking quite dramatically. And if there's enough demand on this shrinking supply of BRC20 Track, because mainnet Track is effectively burned until it's realized again. Once you stake it, you can't unstake it. We could see price get a little bit silly leading up to mainnet. So that's part of the reason that I'm choosing not to stake my Track. Is I will probably, more than likely, sell my BRC20 going into Track mainnet. And then I will probably just buy on-chain Track on the other side. I don't need to hold through it. I'll probably just buy. But yeah, that's Track. How's TAP doing? TAP hasn't really made any waves. Hasn't really done anything too significant. So TAP is meh. Tap is meh. And let's take a look at the Sonic. Sonic hasn't really moved, but this is to be expected because Bitcoin dominance is still climbing. All right, I'm going to have a little bit of a shorter show today because I find myself repeating myself. We're kind of just talking about the same thing here. So we'll do the recap on Bitcoin and then we'll get out of here. So we need to reclaim this level of 84. If we can reclaim and hold some successful tests, probably above the 30, we'll probably find ourselves up at around that $90,000 level, that psychological $88,000 to $90,000 level. So that's what I'm expecting over the coming week. And we'll have to tune in and see how things progress. So thank you all for joining in. If you didn't already like and subscribe, please make sure that you do so. Follow me on Twitter and retweet this. Follow me on X and repost this show on X. And we will see you guys in the next show. Peace.